Hi, Kristen. How are you?
Good, how are you?
I'm doing awesome. We appreciate having you on here today and looking forward to hearing about your company and all of the different loan changes that have happened here in the last couple of weeks. So let's go ahead and get started. Why don't you give us just give us your name, your company, and your experience.
Sure. So my name is Kristin Lucas and I work for Fairway Independent Mortgage Company. I've been in the industry for about 8 years and Fairway has been around for 23 years. Fairway is a direct lender, which means that we do all of our processing, underwriting, and doc drawing and everything in-house.
Wow, that's really cool. Do you have a team that works behind you, either inside or outside of your office?
I do. So I have Missy Lucente, who is a loan partner to me, and she will assist with all the buyer documentation up front. So you might hear from her if you're missing a few bank statements or something like that. So she does the initial part of the process. And then there's Caroline Flaherty. She works in the San Diego branch, but she's the loan processor. So or should say loan partner as well. She works directly with the underwriter to make sure that we're meeting all the criteria that she's requesting. She does reach out to clients and agents as well if there's any other missing documents along the way.
Gotcha. So it sounds like you have a big working team behind you. So let's get into that a little bit. Before we get there, there's a lot of terminology that you use like underwriter and processor. So we'll get to that, but let's talk about loan types first. Someone wants to buy a property and they don't even know where to start. They don't know what kind of loans they're eligible for. If someone comes to us first as an agent, we always encourage them to go to a lender. So as a loan officer, what can you do for our client? What does the process look like before they know what type of loan they can use?
Sure. So my job is to gather all the financial documentation to meet the criteria for the specific program. So I'll usually do an initial phone interview with the client, just kind of gather some general information as far as what they're looking for down payment, monthly payment, what line of work that they're in, so I know better what documentation to ask for. And then I ask for their formal or preferred method of communication. So if a client wants to come in and meet and do the application and go through the documents in person, I'm totally fine with that. Or I can do the application on the phone and then have them follow up with bringing in their documentation, whatever they prefer. Once I gather those items, all of that information is seen by a pre-approval underwriter. And then at that point, I'll usually circle back with the client and ask them to come in, go through a buyer's presentation and just go through different payments and programs that I think would best fit their criteria. And then let them start the shopping process at that point.
That's great. So how long does a typical pre-approval process work at your company? If someone is a buyer and they're getting you documents, fairly quickly when you ask for it, how quickly can you get someone pre-approved?
It's usually about 24 to 48 hours, just kind of depending on if let's just say within the first 24 hours, if there is additional items that are needed that wasn't included in the initial package, then it'll typically be another 24 hours after that once we are able to render that final pre-approval. There are some cases where, depending on the finances, that we do go through a full underwriting process up front, but that's just to make sure that the client, once they go into escrow, is fully pre-approved and we're not worried about falling out of escrow or anything like that.
That's great. That's really important right now with our really competitive environment that we have going on. So that's great. So tell us a little bit about what your communication looks like with a buyer. And once that buyer is connected with an agent and they're out looking at properties, how does your communication work with the agent as well? Do you talk to the agent at all?
Sure. So obviously, I do let the agent know right away that the client is pre-approved. I don't go over any finances or anything like that with the actual agent. So they just know that the client's been pre-approved up to X amount of dollars, and that also could be that the client wants to cap out at a certain sales price as well. So I let the agent know what their maximum sales price that they're looking to be at, and that's what I communicate over with the agent. And then once they go into escrow, I like to have a conversation with the listing agent as well once offers are being submitted, just so that listing agent knows that they've been formally pre-approved with a pre-approval underwriter, and it helps strengthen their offer, and also help the listing agent feel better about the offer as well.
That's great. I know that I appreciate that when our teams had buyers write offers. I love when you reach out and talk to the listing agent. That always impresses them. I'm amazed that more lenders don't do that, actually.
Yeah.
Let's talk a little bit about actual loan programs that buyers can get when they work with you.
Sure. So there's a lot of different programs out there, but I'll kind of go over the three main programs. So conventional financing, which would be the first option, and that's a 3% down requirement or greater. And the credit score requirement for that program would be about a 620. If you're putting down in a 620 credit score range, you'd probably need to put down a pretty significant amount. For the 3% or 3 to 20%, I would say roughly 680 would be the credit score requirement for that. And then the next option would be FHA financing. That minimum down payment is 3.5% of whatever the sales price is. And then the third option would be the VA financing. And that's typically zero for the actual down payment. And then following that, they'd have, closing costs and things on top of that they'd have to bring in. And for both of those, our credit requirements are now at a 680 for the FHA and the VA. And that is a change from what we were seeing, obviously. And that's just kind of due to the economy and everything, all the changes that are going on right now. So in order to mitigate risk, and looking at like first payment defaults and things like that, they've changed the credit score requirements to that 680 credit score range.
Gotcha. Okay. And are there any down payment assistance programs out there, closing cost assistance programs, jumbo loans? Are you seeing any more changes in regards to loans with everything that's happening with the shelter in place and the economy being on hold?
Yeah, absolutely. So the last 30 days, we've seen a huge amount of change in the industry. So jumbo financing is unfortunately not something that we're currently offering right now. Down payment assistance, same thing. We're currently not offering that, as I would say a lot of lenders right now. And that's just due to the financial backing and things like that go behind the scenes. So non-traditional types of credit, like bank statement programs and that sort of thing as well, have kind of have gone away temporarily. So we're anticipating that, we hopefully see those programs opening back up again in the near future, but right now we don't really have an estimated time for that to happen.
Okay.
Same for like the credit requirements. So, FHA and VA had a much lower credit score requirement before, and I believe this 680 credit score requirement right now will also be a temporary change, but I think that it'll open back up and we'll start to see the requirements lessen again.
Gotcha. So in the Fresno area, since the jumbo loans did go away, I feel like we're actually pretty fortunate in our area, since our average sale price is at and right below 300,000. The jumbo loan, we still have like luxury and really nice properties here in Fresno, but luckily our housing market still has not slowed down that much because our sales price is a lot lower. What is like the max sales price if someone is putting 20% down here in our Fresno area that they can get to without having to go into a jumbo loan that you're not offering right now?
Sure. So the loan amount for conventional financing is $510,400. Okay. So anything, I would say that would compute to, let's just call it 600,000, somewhere around there in sales price, give or take, without having my calculator out right now. But the loan amount would have to be $510,400 or less in order to meet the criteria for the conventional.
Awesome. Okay. Well, that's still great. I mean, especially here in the Fresno area, you can still get a really great house for that price. So
absolutely. Yeah.
Any other changes that you've seen out there in the last couple of weeks in terms of anything like loans or loan requirements or funny things that underwriters are looking for to help buyers get their properties closed?
Yes. So the other thing that's tightened up a little bit is what we would call debt to income ratio. So basically what that means is any current debts that they have, student loans, credit cards, auto loans, plus the proposed housing payment divided by their income. That's the debt to income ratio. That number has gone down to 45% on all FHA and VA loans. And then obviously up to potentially 50% still on the conventional loans, but that number has gone down from what it was before. The other thing the underwriting is really looking for is, and they're really big on, is verifications of employment. So we have to verify employment multiple times throughout the transaction. At this time, we are now verifying usually within 3 business days of closing, and then again on the day of closing. So it's really important that clients understand when they're starting the process that we will need to speak to or have something in writing from a direct supervisor or their human resource department, just verifying that they still are employed up to the day of closing.
Gotcha. Is that verification of employment, how different is that now than it was a couple weeks ago?
So a few weeks ago, we just had to do a verbal verification of employment within 7 business days of closing. So now we typically on most loans will do them at the initial start of the process. And then, like I said, about 3 business days prior to closing, we'll do another one, and then the day of closing. So we've added, I would say, at least 1 more along the way.
Got it. Great. So the big question that everyone always wants to know is interest rates. What have you seen happen with interest rates over the last couple weeks? Where are we at now? And what are you hearing behind all that?
So rates have been the most volatile that they've ever been, I would say, in the last 30 days. We went from probably about 30 days ago now, maybe about 5 weeks ago, lowest rates that we've seen in 7 to 8 years, maybe an all-time lows. And that was on like a Monday, and by Tuesday we lost maybe 0.5% in the market. And from there we saw a roller coaster within the interest rate market. So we've stabilized a little bit right now, and I have rates are in the low 3s to high 2s, just depending on the program and credit score and that sort of thing. So we're back to that all-time low. It's really a great time to buy and take advantage of these low interest rates. As far as where I think that it's going to be going, now that we've kind of stabilized in the last week to 2 weeks, I think that we're going to see this for a little bit now. And it will obviously depend, like once once this kind of once everything kind of opens back up, we could see some changes, and I'm sure we'll start to see a little bit more volatility, but for now rates are very low.
Well, that's really great to hear. I know there are still buyers out there, and it's a great market for sellers still because inventory is still low, and there's hungry buyers out there that are looking to capitalize on those low interest rates. So that's great. Is there anything else that you think that maybe a first-time home buyer or anybody else should know that we didn't talk about today?
For me, I think it's a great time to buy, in all honesty, even with everything going on right now. Just capitalizing, like I said, on the low interest rates. I think values are going to continue to go up. And I also feel like there's a huge shortage in the housing market. With that being said, I think that it's a great time for buyers to be looking, just because there's so many multiple offer situations. And I think that this has kind of helped maybe weed out a few people right now. So I think it's a really good time for buyers to be actively looking and taking advantage of these really good interest rates, not knowing how long they'll stay around.
Gotcha. Well, thank you so much for chatting with me today.
Thank you.
And hopefully we'll be catching up with you soon.
Sounds good. Thank you.
Absolutely.